So I had to laugh a little bit about Saudi Arabia's pledge to cut their exports deep in August. Well, sure, it's hot. They're going to keep the oil for themselves. Yeah. So a distinction between reality and what's going on behind the scenes.
Right. I think that there's a danger that the market, interpreted that initial headline and thought, well, they're going to cap exports at 6.6 million barrels a day for the remainder of this, deal. But I think what's important to understand is that, the OPEC countries and this OPEC and non-OPEC group is very hopeful that in the second half of the year they're going to get that inventory drawdown. And we believe that will be supportive for prices. And I think it's important to understand that we're dealing with two paradigms. The paradigm before these OPEC cuts came into place and the prospect that, right now we could conceivably go back to that after March 2018. And I don't think that, for any of these OPEC countries that they really want to go back to that paradigm where prices could go to 60 or they could go to 30. And so that's really what is going to keep the Russians and the Saudis at the table here, and in our view, is likely to keep this signaling mechanism continuing on through 2018.
If you talk to anyone deep in the weeds in the oil market, they're going to say the rebalancing is starting to happen at the margins. They look at the heavy light spread, they look at time spreads, short-term time spreads, blah, blah, blah. But the sentiment, in some ways, much more important. And when you hear headlines like Iraq pumping 5 million barrels a day at the end of the year, their compliance down under 30%, Kuwait wanting to ramp up. I mean, when you hear that, it really undermines any reality. Yeah. From where you sit, what does that do to the price short term?
Right. So, I mean, you add to that long list, Libya and Nigeria, because if you think about what happened from January until now, January through April, things were going really well. OPEC had taken off 1.5 million barrels a day, but basically, if you look at our forecast through August or even through the end of the year, the effectiveness of drawing down global supply is actually much more muted because of Libya and Nigeria coming back. So I think it's important, to answer your question, to look at what's happening just this week. This week, we're going to get producer earnings. What happened during last round of producer earnings is a whole new bout of weakness. These producers have been able to continue to grow their production at lower prices. They added just as much volumes over the course of 2016 as they did in 2012 at half the price. So it's important to understand the impact that is going to have on sentiment. And so what can OPEC do in this situation? Not really much at all, other than just signal, here's where our production is going to be.